On today's show, we want to do a little talk about, and we're calling it Ask Nicholas, questions from the 20-year-old. So, you know, Nicholas, in the last few months or so, you've been out there, you've been meeting a bunch of your cohorts, your demographic, talking about financial planning and talking about investments. So we wanted to get into today some of the biggest questions that they're asking you. And the first one here I wanted to get into is they're asking you, hey, Nicholas, with the current market volatility today, with Russia, with interest rates, and with inflation, what are we dealing with? And how's this going to affect their investing styles?
Definitely. I had a lot of clients, express their concerns with the volatility. However, I'm going to quote, a famous investor, Warren Buffett here. And he said that, when those individuals are fearful, you should be greedy, and vice versa. So I think it's a really good time for those even exposed to the markets or wanting to get into the markets to be very, greedy per se here. And especially with the long-term time horizon, it's a very good opportunity for sure.
Absolutely. I mean, Warren Buffett is the most famous investor. And I love it. Again, you should be fearful when others are greedy, and you should be greedy when others are fearful. And it's amazing. And it's the best time to create wealth is when everybody's discounting what's happening. Everybody's running for the hills. As an investor, the courageous and those that are committed is when they come in and they add a position. If you look at professional money managers in downturns, professional money managers aren't taking money off the table. They may be repositioning their portfolio, but professional money guys are always looking at ways to add more money to the portfolio.
Yeah, and they're being tactical. They're responding to these conditions.
Yeah. One of the things I do say too to all those out there is what's amazing about the investment market, the stock market is, we think about Boxing Day as a shopping holiday. So on Boxing Day, what happens is everybody's rushing to the mall. Prices are reduced 10, 15, 20, 30%. And we're standing in line to save 25 or 30% on a purchase of something. But yet when the stock market goes on sale, 10, 15, 20%, nobody's standing in line, right?
Scared. Yeah,
so,
exactly.
You've got to take the cue from the Boxing Day sale is when things are on sale, sometimes it's best to add to your position. Number two question here, Nicholas, that you've been getting from some of your own clients is what types of sectors are there opportunities for investors these days?
Yeah, it's a really good question. I think we know that the green movement's really good. Right now, it's a very, very important thing to be aware of. Innovation, AI, cloud computing, healthcare, these are all really good sectors that, individuals, investors should start to look, gaining some exposure into for sure.
Yeah, because I think what happens with most people is they go to what's tried and tested. They buy banks, they buy dividend stocks. Nothing wrong with those types of assets. They're all great assets. But for younger investors who have a longer time horizon, we know that listen, with Russia and the whole Ukraine issue right now, there's a bit of an issue with oil and so on.
Totally.
That's been bid up through the roof. But long term, next 10, 15, 20, 30 years, there is going to be a green movement, a green innovation. So that's a great opportunity. And also, too, for those out there, the healthcare areas and AI and cloud technology. So, again, great places to go. The one quote I always tend to use with our clients is Wayne Gretzky's famous quote. Wayne Gretzky was interviewed and they asked him, Wayne, you're not the fastest skater. You're not the biggest player on the ice. Your shot isn't the best, but you're the greatest player of all time. What's your success? And he said, my success is my opponents go to where the puck is. I go to where the puck is going. And I think as investors, we tend to follow the puck into the corners. What we want to do as investors is figure out where the puck's going to be coming out of the corners and go stand in that position.
Yeah, and it's not like we're saying, hey, let's go heavy and put all our chips into, alternative health or green energy. We're just saying, maybe let's look at some exposure, a couple percent of your portfolio holdings, nothing crazy.
Diversification works, right? At the end of the day, and even what's happening right now in the market in 2022, we've seen the market pull back a bit. Those that are well diversified haven't really felt the effects, but those that are heavily weighted in certain areas have felt more of the effect.
Exactly.
The third question here, Nicholas, that you mentioned that you were getting a lot of is about cryptocurrency. And is cryptocurrency a promising sector for investors?
Yeah, it's a complicated subject. However, to be really simplified here, it's extremely volatile. It's new. It hit a large bubble in the last few years, especially when the pandemic hit. However, we're seeing large institutional money managers such as Fidelity. They're suggesting about 1 to 3% allocation into crypto. I think it's a good thing to have exposure to, But again, it's very volatile, and I think time will tell. And it's really important to know your time horizon, because if you're short term, being in crypto could be potentially dangerous. However, someone with long-term exposure, they could have a few percent there. For sure.
It's really it's an infant. It's in the infancy stage of its development,
Exactly.
right? So again, nothing wrong with speculating a bit on cryptocurrency. You can put some money into crypto, have some fun with it. Hopefully you hit it rich and you become a billionaire. If you don't, you haven't lost all your wealth if things go sideways. But again, we go back to the fact that diversification works. And, as you create more and more wealth in your life, you'll find that, people want to be in different areas. They want to be in technology. They want to be in healthcare. They want to be in finances, financials, and those types of things do well. But as you mentioned, most professional money managers, all the big institutional money managers, are only holding roughly a 1 to 3% maximum weighting in cryptocurrency. The fourth question, and we've seen a ton of this within your own business, is what is the best method from a tax efficiency to invest in either mutual funds, ETFs, or stocks?
And that would be the tax-free savings account, or otherwise known as the TFSA. It's a phenomenal account. I think everyone needs to be looking in this account to maximizing its potential. But I do see a lot of misconceptions with it. They think it's just another type of savings. However, you mentioned it should be called the tax-free investment account, because this is where you can grow your investments without having to pay any type of tax or capital gain.
Exactly. When the government first put this in place back in 2013, it was designed for Canadians to put money away. And I think the biggest, like you mentioned, the biggest misconception is it's not really designed to be a savings account. A savings account doesn't make any interest. And this is one of the great benefits. And I always say to people that there's only 3 places in this country where you can actually grow wealth and grow it tax-free. One is in a TFSA, 2 is in your primary residence, and 3 is through life insurance. So those are the only 3 asset classes where you can grow wealth and not pay tax. And I think before 2013, most Canadians, young, old, whatever it may be, the only game in town was buying an RRSP, a retirement savings plan. And what we're finding right now, especially with that 20-something generation, is the TFSA is by far the best way to go. And again, what you hold in it is based on what your needs are. It could be stocks, it could be cryptocurrency, it could be ETFs, and it could be some mutual funds. Number 5 question here that Nicholas has been getting from his cohorts in the past 6 months or so is, how does the TFSA work, and how do you contribute to it?
Yeah, so pretty much anyone who turns 18 is eligible for this account, and how it works is the government will release your annual contribution limit. So for example, this year 2022, as soon as January 1st hit, everyone got topped up another $6,000. So you can invest biweekly, weekly, monthly, lump sum. You just can't go over that amount.
Right. And one of the big things we're finding is that a lot of people don't understand that there is a limit to it. What we always advise our clients to do is pick one institution to run your TFSA. So if it be your advisor, if it be your brokerage account, if it be your bank, whatever it may be, what you don't want to do is have multiple accounts, because what happens sometime is there's some oversight where, the client might be, let's say they're 18, 19 years old, and the maximum contribution is $12,000. They give $12,000 to you. They go to their bank. They have a conversation one day because they have some savings. The bank person says, hey, why don't you buy the TFSA with them? And then, of course, they may go online and buy a few things on their own. And there are some severe penalties for the over-contribution.
And we've seen it, too, with a couple clients. They set up one here, one there. They're doing one with mutual funds, or maybe they're doing some Enquest trading stocks. And they will think that, each account can have this amount, this limit. But, the last thing they realize is, no, it's across all accounts. You could have 5. It's, for this year, for example, 6,000. And as soon as you go over that amount, it triggers a 1% tax on the excess
per month, right? And the other issue with the tax is that it typically it takes the government about 2 tax years to figure out you've over contributed. So if you've over contributed $10,000 by mistake, you're talking about a 1% penalty per month, and it could be retroactive for 2 years. So really, really punitive. Be careful. Again, get some advice on that. And the last question here I want to get into, Nicholas, is once your generation, let's say again, a 20-year-old comes in, the grandfather left them $50,000. the advice is, hey, we want to max out your TFSA. That takes up, let's say, $6,000 to $12,000. There's still going to be $38,000 left over. Where do they put it?
Yep. So typically you just run an open account, same type of thing. You can have any type of investment in this account. However, there is going to be a capital gains tax. So let's just say you got 10 and it grows to 50. The gain there would be 40, 50% of 40. So 20 would be taxable at the marginal tax rate. Right. However, it's still one of the most efficient ways to mitigate tax while investing and while growing your capital.
Yeah. After buying your TFSA or investing in your TFSA, the second best place to deposit your wealth is in your open account. And like we say to a number of clients, in that open account, we can build a shelter around it so it can grow for a number of years with very minimal tax. Again, if you're going to invest in the open account, talk to your advisor. Be careful if you're getting dividend income, interest income, capital gain income. So it's good to get some advice on the taxation. But again, if you've maxed out your TFSA account and you're loaded up, obviously do the open account. Totally. Any last thoughts on the TFSAs, Nicholas?
I think it's tough, right? There's so much to know, and how do you know? Where do you find it? And even in the institution school, they don't really implement a whole lot of education and time on personal finance. I know I just finished up at Brock a year ago. I took a financial planning course, and that's when you really start to dive into these concepts. But other than that, they really don't have any mandatory courses where you can even just get some type of broad knowledge on these concepts. It's really tough. Yeah. It's really tough.
It's the buyer beware. And again, exactly. What we don't want to see happen is people go out, make some good decisions to put their money away, some good decisions to invest their money. But then, of course, they're either in income producing assets that don't produce any return. Exactly. They're in GICs or bank accounts within their TFSA, or they're in stuff that's extremely volatile. So it's important that people talk and reach out to people like yourselves. So again, for those out there, thanks again for watching on YouTube and listening on our podcast stations. Again, if you want to go to any of our previous podcasts, if you type into your YouTube feed, It's Your Wealth, the podcasts are located there. Again, feel free to reach out to Nicholas or myself.